So we're going to turn this into a fireside chat. Unfortunately, Gail McGiffin could not join us due to personal situation. I got an email from her late last night. She sends her regrets, wishes she could be here to see a lot of people. I know many of you were wanting to see her. We all thought she retired, and then she came back with Vantage Risk, so she's looking forward to connecting with many of you. So today's panel, Accelerating P&C Insurance Industry Transformation to Thrive in a Digital and Data Arms Race. Just a little bit of background on myself, since we're going to do a fireside chat. I'm Denise Garth, Chief Strategy Officer at Majesco. I've been in the industry for my entire career, and as most of you know, if you last 2 years, you're in it for life. And I've been in it for life in a lot of different roles, inside insurance carriers, with Accord, with a couple of vendors, and now most recently Majesco for the last 7 years. And I'm really pleased to have on my left here Arlene Kern. She and I have a chat probably about every 2 or 3 months to kind of talk about what we're each seeing in the industry and what's kind of happening. And I'm going to let Arlene give a little bit of background on herself before we get started. Arlene.
Great, thanks Denise. Well, welcome everybody, thanks for joining us. As Denise said, I'm Arlene Kern. I too am a lifer. I've been in the industry my entire career, and most of that time has been spent with MunichRe. I've got an underwriting background, a financial background, a business intelligence background, but right now I work in the Silicon Valley area, working on innovation for the global innovation team of MunichRe, trying to find startups, technology, business models that'll help accelerate the innovation efforts of MunichRe, and really happy to be here today.
Yep. So we're going to ask each other questions, and we'll just kind of have a chat throughout it. We are going to leave 10 minutes at the end for Q&A, both from the audience here as well as virtually for those that are participating. So I think we all can agree that the whole commercial and specialty market is just red hot, with lots of new startups, with lots of new business models, new products entering into the market. And it's really adding fuel for growth, particularly for this segment. One of the things we want to talk about is why is this segment so hot and why is there an opportunity for growth? But what are the underlying drivers and how are the customer demands changing? So Arlene, I'll let you kind of give your perspective on that first.
Sure, sure. So when I think historically about the specialty lines, I really see them often being the square peg in the round hole. They've followed on to a lot of the mainstream lines, and the mainstream lines have been extremely analog and manual, and then the specialty lines are then bolted on top of that, right? So the processes are really some of the least intuitive and most heavy touch processes, and I think that's really making it ripe for disruption. That's both from a customer standpoint. It's very difficult sometimes for the customers to interact with their carriers because it is specialty, and again, there are a lot of intricacies and specialties, right? That's why it's called specialty, but also for the carrier where it becomes very inefficient. So there's such a huge opportunity to make it much more customer-centric while also making it much more operationally efficient for the carrier, and it's a win-win situation from both sides of the transaction.
Yeah, and I would just say that one of the things that we have seen through our own primary research with business owners in particular is that they are really looking for something that is going to really meet their unique needs. And I think what we've done historically is we had all of the traditional products and we kind of bundled them together, into a package, that was really good for that business owner, whatever it may be. But the businesses have changed, particularly in the last, 18, 24 months, they've changed pretty substantially. Nearly every business now is digital. They've got a digital storefront in some form or fashion. They've got new types of risks, think about all the takeout or the delivery or the curbside. All of a sudden that introduces a whole set of new risks associated to that. And I think what we've seen is that there's an exploding set of just new risks associated to business models of our customers that they now need different types of products to be able to support that. And then when you layer on the other aspect of risk with things like climate change, new and intensified risks, whether it's hurricanes, it's fire, it's ice, it's tornadoes, those types of things, as well as just other types of cyber type of risks. I think we can all agree cyber is pretty dominant these days, and nearly every business is going to have some type of cyber risk, but going forward, almost every individual is almost going to have a cyber risk associated to it as well. And so I think when you look at the type of risk, and then you look at the types of data that's going to be needed for that, we can't go to the analog, as you say, Arlene, type of products or the processes. We've got to look at it much differently from a digital perspective to be able to not only underwrite, but also service, and also to engage on a distribution perspective. Any other thoughts on that one?
Yeah, no, I think it's a perfect convergence, right, of the technology, because we're really talking about the products and we're talking about the changing risk landscape, which that's absolutely true. But the enabling technology that is now available to help solve all these problems, it creates a great opportunity.
Yep. And I think that's the, kind of moving into the next topic is really to capture these opportunities. You need to really do it in a way that's going to create sustainable advantage. It's not just kind of quick getting a product out there, but how can you get a product out and really build on that and create a sustainable advantage in the marketplace? And when we talked ahead of time about this, we were talking about it in terms of technology, people, processes, channels, and products. And in many ways, the startups in the greenfields, the greenfield being probably an existing insurer standing up a different business model, it might be a completely new brand or just a new division, they seem to have some advantage here. And how does that really work? Because I know you're involved in a number of them from a MunichRe standpoint, and we work with a number of them. And then how does innovation kind of fit into that? I'll let you take the first view.
Yeah, that's a lot of questions, right?
I know.
But I'm going to start with the one in terms of the startup advantage, because I think it's really important, and it's something that we certainly recognize at MunichRe and think about a lot. I have an analogy to my hometown back on the East Coast, where there was this hospital that was running, functional, very well respected hospital, but it was aging and it really wasn't updated with the modern tech. And so there was a deep study, as is often done: should we renovate this hospital or should we tear it down and build brand new? And the ROI was clear that it needed to be torn down and built brand new. And some of that wasn't just how much the retrofit was going to take, how hard was it going to be to get everything into this old framework, but it was about the changing needs, right? Hospitals, they want medical centers, doctors' office buildings right next door for the convenience. They want private rooms, because of the new HIPAA regulation. They want amenities for both the patients and the families of the patients in the hospital, and trying to retrofit that in can be very, very difficult. And I think it's the same way when we think about when we even think about, you and I said we're lifers, when we think about what integration projects used to be, when you were going to upgrade anything, a product, the technology, you always first thought about, well, how do we link this in, right? How do we tie this in? That we should, from moment one, it was, how does this connect? And now the thought is, don't connect, right? Like, keep it as far outside of your legacy, as far outside of whatever you're going to have to connect to, and only connect at the absolute necessary points. Instead of trying to integrate it all along the way, be very modular and just put those connections in where you need them. And again, I think this is where the startups have such an advantage, because they think that way, right? They're not burdened by the legacy. They're not burdened by the architecture that may already exist within a carrier's framework, and they're able to just really think outside of the box. And of course, the API technology that now allows for easier integration. I'm not going to call it easy integration yet, not yet, but certainly easier integration back into the legacy systems. That's really changing things.
Yeah, and I think, from my perspective, I think there's a couple of things that are really different. I think, when we all attended the first ITC about 7 years ago, we were all a little bit stunned, I think, coming from the traditional insurance side as to what was this whole thing about. And I think a lot of insurers took a pause, trying to figure out what does this whole InsurTech thing mean. And I think initially they were really fearful of it. I think we adapted to it, and I think that adaptation is really allowed us to kind of step back and say, how do we want to operate differently to actually compete and actually take on a lot of that. And so I would say from a marketplace perspective, we've seen a lot of traditional insurers say, we're going to go after a new segment of the market. We're going to offer a new set of products out to the market. And they stand up a new policy system that they can get an MVP out in 8-9 weeks, not in 2 years of a legacy transformation. We've done a lot of legacy transformation, particularly in the P&C industry. A lot of them still have a lot to go forward, particularly the tier 3 through 5. But it no longer, the technology allows us to not think that we have to have everything on a single system. We can actually stand up multiples, and through the technology and APIs and other types of things, we can actually connect to it. I think the other aspect of this is that we now have some people inside some of these companies, similar to the InsurTechs and startups, that are thinking differently. And I think prior to this, we had a lot of people who came up through the ranks and didn't necessarily, well, that's not how we really do business. That's not how we operationally do this. And I think we've embraced kind of an outside-in perspective, and I like to say embrace a rebel rouser. I've always been one of those rebel rousers through my career. That's why I probably had different types of positions. But I think we have to embrace them because they think differently, and I think they really challenge us to offer different types of products and different ways to actually accomplish that in a much more cost-effective way.
Yeah, and I think embracing, right, the technology and the people together, right, rather than being fearful or intimidated by it, really bringing it together. And I was really struck by the keynote talk this morning with GM, where they mentioned that 2 people drive the car now, right? It's the technology driving the car, and it's the person driving the car. And I think that that's where we're going in the insurance industry. We've got, it's not 2 people, but 2 things, really navigating the insurance industry. It's the technology, and it's still the people.
Yeah, and I think that initially some of the InsurTechs thought that they could just kind of go and, blast the world with, introducing a new product, and then they came up to the reality of 50 states and regulation. And, we still are a heavily regulated industry, but quite frankly, the regulators are getting on board with it. I know when we do some of our customer research, I have conversations with a lot of the regulators because they're now finally recognizing that their constituents that they actually support in their state actually want some of these products. They demand some of these types of capabilities, and so they're much more willing to work with existing insurers, and I think that's the advantage that existing insurers have. You've got the relationships, you know the industry, you know the regulation, but you know also how to kind of approach it in a different way. So one of the other things that really kind of ties into all of this and is in our title actually is the whole concept of data and analytics. We've talked about this for quite a long time as an industry, with BI reporting and with predictive models, and now we're into AI machine learning and now deep learning and a lot of different things, and now we're just seeing this massive explosion of lots of data, both structured and unstructured. And it is now becoming an arms race as to who can really capture and do different kinds of things with that data. Are you able to do it? And that's going to really be a differentiating factor for insurers, both operationally from an effectiveness standpoint, building it into the workflow, but even more importantly on the underwriting side, at what kind of risk can you take on? Are you able to kind of pinpoint more of the risk in a much more cost-effective way to drive profitability? And then on the back end, from a claims perspective, it's a topic you and I talk about a lot. So thoughts on that, Arlene?
Yeah, when we think about data, or I'll say when I think about data, it's always in 2 different buckets. And the first bucket is, how do you optimize the data that you already have? Right, so how do you collect that data? How do you reconcile that data? How do you really optimize everything and that you need to optimize with that data? And insurance companies historically haven't been great at this, right? So there's a lot of duplicate entry, and then when you have that duplicate entry, that's where you can see the errors in the data, and so you've got to reconcile the data. And then how do you store the data? Where do you put the data? How do you access the data? How do you allow access to the data? And then finally, how do you report on the data? How do you visualize the data? and how do you really draw insights on the data? And that's just the data you have, right? That's not yet introducing the second bucket, which is what is the data that you don't have that you need, and it will allow you to change your processes completely. Specifically, I think underwriting is is one of the best examples, or the application process. But for the quoting and the underwriting, can you take data from other sources? What are those sources? What's the veracity of that data? How do you really know that the data is accurate, and how do you build it into the process of making decisions and then count on that data to make that decision consistently? And then finally, the people, and we've talked about this a little bit, that people, underwriting historically has been quite subjective, especially as you get into the specialty lines. It's extremely subjective. So if you're going to be a data-driven company, you really have to rely on that data and use the data. And then the people really do the analytics to say, well, what is this data telling me? How do I have to, maybe adjust my portfolio? What do I need to do with my pricing? How do I create really good, solid feedback loops? So what's happening in claims that immediately, almost in real time, gets back to pricing or gets back to underwriting. This is where the people come in and make the adjustments.
Yeah, and I think that one of the key things here, obviously getting your data all organized and understanding what it is you have is fundamentally there, but it's also creating a repository of a much broader set of data that you can actually apply models to. You can apply machine learning, you can apply artificial intelligence, and even deep learning, that you can begin to really understand things in a different way. But, a simple example that we really looked at with a recent acquisition of Utilent, loss control, is you think about loss control. That was really used on the front end for selected policies that you were going to underwrite, because there might have been a little bit more of an associated risk. Well, they've created technology that they allowed it to be done virtually by the policyholder with photos, with video, all of that. And what that did is it opened up, from an operational efficiency standpoint, the ability that you could actually potentially look at every policy that comes through. Now, you would say in the past that would have been difficult because you send a risk adjuster out, and that becomes expensive. Well, now you can actually pull in a lot of that data, that you can have a much broader sense of that in the underwriting process, and then pull in other third-party data and models to be able to apply that. More importantly, you can take that information, I'm going to go back to the customer experience perspective, and now you have a report, a risk loss analysis. How could you actually decrease your risk exposure? How could you avoid a claims? And at the end of the day, I think the real thing that we want to do is make sure that our customers feel that they are getting a level of service, not just paying out the claim on the back end, but maybe helping them avoid the whole process altogether. And I think that's a piece that data and analytics really plays into really, really well, is how do we flip the model? That it's not about paying out claims, it's about avoiding claims and applying data and applying the analytics to it to really kind of change that customer experience model.
Yeah, and that goes back to another comment from the keynote, right? That it's really about the prevention and the air tire pressure, right? That really does impact stopping distances. How do you turn that into an insight that you can actually act on it and prevent that loss up front?
Yep, and I think that's what Tesla is doing really interesting, and what GM wants to do and what Ford wants to do is taking that data, and yes, they're going to use it from a claims or an underwriting perspective, but they're going to change the car, the design of the car to lessen, the cost of that, and that's really rethinking that model. And to be honest, that's going to be really difficult for insurance companies to compete against, because that drives a whole different level of loyalty and a whole different level of customer experience that we're going to find it very, very difficult to repeat. So we've got to kind of think about it in a different way. So one of the other things that everybody's talking about is speed to market. Top of mind for business leaders. I don't care what research you look at, whether it's ours, whether it's industry analysts, whether it's some of the big four, speed to market is one of those top of mind types of things. And it's difficult to achieve this because it requires a change in mindset. And it requires a change in how you execute. And we had a really active conversation about this ahead of time. Thoughts on that?
Yeah, it's always funny as an incumbent to talk about speed to market, right?
Yes.
Because that's not what incumbents are known for, right? And at MunichRe included, and most carriers, and actually there's a reason for that. As the risk taker, you don't rush to market. You really want to think through what are those product offerings. You really want to assess that risk. The insurance industry, if nothing else, they're responsible for putting a price on risk. And putting that price on risk is not always an easy thing to do. You have to thoroughly understand the risk and then build the product around that risk. So speed to market is really not front of mind for most incumbents. I see that changing. But I also see that this is where there's often a mismatch between how an incumbent wants to move and how a startup wants to move. The startups are really good at this, right? They really are focused. They know exactly how they want to acquire that first customer, that first 10 customers, those first 100 customers. And the incumbents historically just haven't thought that way. This mismatch has made it difficult in the early days for the startups and the incumbents to really work together. I do see the gap or that mismatch in timing. It's closing, but it's still there.
Yeah. I think you can have speed to market, and that really drives to taking a different approach. To your point earlier, don't think that you have to do all the integrations downstream. What do you want to do for a minimum viable product? How can you get a new product out to market really quickly, test it out with your distribution channels, test it out with the customers, adapt and make the changes that are needed? I think that the days of the 3 to 5 year big projects, multi-millions, tens to hundreds of millions of dollars, those days, that's actually even more risk than trying to get a new product out to market. And I think when you begin to look at that, and you look at the opportunities associated to a minimum viable product, it allows you to really test some things in a lot of different ways that you aren't spending a lot of money. It's the old adage, test and learn in a very rapid period of time and fail fast, and be able to kind of come back and adapt to it. But that, once again, given that we're a risk-adverse industry and culturally within organizations, that takes a different kind of mindset. And once again, I'd say that's where some outside thinking, and new staff that can really bring that outside-in perspective and can bring in that kind of rebel-rouser perspective, I think is really important, and operate within, the confines of what has to be operated within the insurance company.
Yeah, and of course our industry has long been a Me Too industry, right?
Me Too,
so
absolutely.
even today I see a lot of reluctance to be first to market with something, but great speed to be second, right? So nobody really wants to be first, but everybody wants to be second. And I think that's okay. A fast follow strategy is not a bad strategy in some cases. In fact, it can be a very good one, but it does require, if you're going to be a fast follower, one, that you be fast, and that means you have to have your pulse on what's happening. Yeah. You really have to be watching what those changes are and be ready to embrace them, adopt them, and move very quickly if you're going to take a fast follow strategy.
Yeah. So what key piece of advice would you give to those considering to enter or expand into this market?
So I had heard this question ahead of time, and I really thought long and hard about what that advice would be. And I went back to several years ago, Barack Obama, and this is not intended to be political. This is really just a statement. As he was leaving office, he was asked a question, something along the lines of, if you could live at any point in history, when would you want to live? And without any hesitation, he said, I would want to live right now. That we have our problems in the world, but the human spirit, human ingenuity, science, technology, it's so fascinating that it's by far the most exciting time to live. And I would answer the question the same way for the insurance industry, right? That the whole idea of the customer centricity, the convergence of the new enabling technology, the great ideas that are coming from the startups and from the insurance insiders, and the mindset, finally, right, that everybody's willing to do things differently. I think it's the most exciting time to be part of this industry, truly. And my advice would be exponential thinking, right? Think big, think bold, everything is possible, and rethink everything. Throw out the old playbook and start with a new playbook.
And I would just echo that, and I would say, look at the rest of the financial services industry, of which insurance is just a piece of it. There's big, bold moves happening on the capital market side, on the investment side, and big time on the banking side that are going to have huge rippling effects into insurance that we haven't even yet seen. And so I think looking outside the industry, that outside in, I can't stress that enough. You've got to really embrace an outside in perspective. So with that, we're going to take some audience questions. We've got somebody here that will have the mic if you have a question. Anybody raise their hand? I think I'm going to have to put on my glasses. We have some in the chat too. Nope, nothing here yet. Yep, question there.
Hi guys, Abhijit from Mosaic Insurance. So we are a startup. We started as a carrier in February, and we write specialty lines focused around the Lloyd's syndicate. One of the things that we're noticing in the market is as we start trying to use APIs and build our insurtech model in essentially recognizing that insurance industry is an ecosystem, right? So we want to integrate with our broker partners, our SCM providers, our claims adjusters, and so on. What we're finding out is there is really a lack of standards where everybody wants to integrate through APIs, yes, but in a very different way, right? Everybody has their own APIs, some accord, some not so accord, some somewhere in between, and so on. And that really slows us down from innovating, as well as just increases the cost, especially for someone like us who's sort of still setting up shop. What's your view on this? Should we be focusing on standards?
You're the core systems. I'm going to let you take that one first.
I think from a standards perspective, having come from Accord and been involved in standards, I think it is a goal to try to have that. But the reality is that it's going to be very difficult to achieve in a very diverse industry. And therefore, I think it really gets back to more of the technology, particularly if core systems have APIs. You know, that they've got a library of those that you can use and that you can possibly adapt or add to it. I think we're at a point in time where really the more important aspect is having a common set of definitions for the data. You know, a data model that is pretty consistent across policy billing and claims, as an example, is extremely important, because while they can stand alone, and you can also then have an underwriting workbench, you can have other systems, that definition of the data and how that data is used, I think, is much more fundamentally important than saying you've got, you know, standardized APIs across the industry. I just don't think that that's probably ever going to be achievable given the pace of change in the industry.
Yeah, I would agree on both counts that the data standardization is probably more important and more achievable. It's more possible, because I think everyone in the industry would probably embrace that to a very large extent, not completely, but to a large extent. And the technology is just changing so fast, and I'm not the tech person, but getting to a standard of those APIs, I think, could be difficult, especially given the fragmentation of the insurance industry at its starting point, right, where it's quite fragmented right now.
And I also think because of the new data sources that are coming in and new risks that are coming in, that nobody's really thought about a standardized, you know, set of integrations around some of that data. And I just think that's going to be constant, because we've got a lot of change happening in the industry. Other questions? One of the questions that I have here, I'll ask another question to us as a panel or as a fireside. When we think about the future of insurance, what do you think is the one thing that you hope is going to be different in 5 years?
Yeah. Well, I already mentioned one where I think there's a mismatch between how the startups and the incumbents are working, and I really hope that mismatch is completely eliminated, that they're just working in complete unity and everyone is working at the same speed. And then with that the technology has really been upgraded and transformed to the point that the industry is able to respond to the new risk needs of everyone, right? We've talked about a lot of the challenges on the climate side, the new digital assets that are out there that require new solutions, the sharing economies that require new solutions. But with all of this, building new products quickly with really, great tech, and that we're able to attract a really great talent pool, that our industry is so dynamic and using the most up-to-date technology that people will actually want to come and work for the insurance industry, not just because of its tech advances, but also because we will be solving really big problems.
Yeah, I couldn't agree more. I think if we go back, and I think sometimes we lose this as an industry. I know when I worked for a couple of insurance companies and there were major events. And when I was at a court and when 9/11 happened, and we can all kind of go back to different events. I think a lot of people forget what this industry really does. It really underpins economies. It underpins businesses. And without us, there really is no economy. I don't care where it's at. And I think that's a really important role that we play, but at the same time, very few people understand that. I think about this younger generation, they really have a moral equivalent. They want to do something that's good for society, that's good for the earth, that's good for a lot of different things. And it's something that we can really play into to attract really good talent. And it is a dynamic. We were just talking, both of us have been in the industry our entire careers, and in the next, whatever number of years, we'll probably be moving on into something else. And it's like, we don't want to retire ever, because this is like the funnest time in our career at this point in time. And that's something to say when we've seen a lot of stuff throughout our careers. And I think that's, one of the interesting things. One other thing I will just say, when I look at the next 5 years, there was a recent report put out by a PE investment capital management kind of firm, and they did an analysis of some of the traditional top insurers, a few of them that are publicly traded, and some of the insurtechs that are publicly traded. And the interesting analysis, they've come up with a different model. And the model doesn't just look at your growth, and it doesn't just look at your profitability. It looks at your customer lifetime value. It looks at a number of new interesting factors that will determine, are they undervalued or are they overvalued? And I think that as we look at different business models, I think this is where the capital markets, the investment markets, are starting to look at things differently and how they're going to evaluate and value our companies from an incumbent and traditional perspective. And that's where I think we've got to start thinking a little bit differently. So I think in 5 years, some of our base models that we've always determined as to, we're A rated by AM Best, are we doing innovation rating, that whole innovation rating, are we really leveraging our capital in a really positive way that it's going to have a long-term sustainable advantage? I think some new models are coming out. They're going to challenge many of the traditional 30 years of operational, factors, metrics that we've used. And I think you've got to really be careful and understand what's kind of emerging in other parts of the market.
Yeah, it's a really good point. The last point I'll add is I hope we close the insurance gap.
I do too.
In many ways.
Yes, one question up there.
Question.
Hi, my name is Serge with Populous Technology, and this really resonates with, I think, a lot of the work that we try to help carriers with, which is the digital transformation. But you really particularly touched on something that's so important, which I think we as kind of software consultants take for granted, which is the MVP. And that means something really significant to us in our minds. But I'm really curious how you sort of align senior leaders around this MVP, because it seems like something that specifically in a risk-adverse industry is just really hard to get clearly nailed down, get all the stakeholders moving in the same direction on what we even define as our MVP. So I'd love to hear, based on your experience, how you've sort of really been able to align other leaders around what the MVP actually is.
Yeah, it's a really great question, and I know we're pretty much out of time here. Just very quickly, I would say it's a challenge. It's not how insurance companies normally think about products. They want, especially an incumbent that has a big portfolio, so to say we're going to go with this really small thing and test and test, fail, learn, build, it's new to us. We're trying to get better at it, and I think as an industry, we are getting better at it, but we need the software development companies, we need the startups, and we need the rest of the ecosystem to continue pushing us to do it better.
And I would just add that walking into it from an MVP standpoint, take as much out of the box as you can. Because what you don't compete on is just typically a lot of the standard processes. What you compete on is your product and what value it provides, how it's rated, and how it's underwritten. That's really where you compete on. And then on the back end, it's your customer service. So take as much out of the box as possible, and it shortens the time frame and allows you to get an MVP out of the market. So once again, thank you very much. Feel free to reach out to Arlene and I. We're on the app, and our contact information's there, and look forward to seeing you all